Hello and welcome to the Development Agenda, a CNBC-TV18 series in the run-up to Budget 2011. I'm Siddharth Zarabi. In the next 30 minutes, we discuss the need for financial inclusion in India with a population of 1.2 billion people and thousands of villages with no access to even basic formal financial services. That clearly is impacting our social and economic growth. The bare facts of financial inclusion are that only about 38% of bank branches are in rural India and only about 40% of the country's population has bank accounts. Though the number of bank branches has risen from 8,700 at the time of bank nationalization in 1969 to around 85,300 presently, only 32,000 of these are in rural areas. The average population per bank branch is 13,900. To address this, the government has planned Financial Swabhiman, a program to ensure banking facilities in habitations with a population in excess of 2,000 by March 2012, using various models and technologies including branchless banking through business correspondents.
We intend to cover at least 73,000 new habitations with a population of 2,000 and above, and we will open at least 5 crore new accounts. The business correspondents reach banking facilities to these interior areas through various handheld mobile devices and other technologies that reduce cost and have the ability to record banking transactions and to communicate the record of such transactions to the bank using the internet facilities and GPRS.
We as a bank are 100% confident the mobile is going to become the convergence instrument of the future and will be the mechanism by which the customer will be doing his transactions, including banking.
The first thought when you think of financial inclusion is credit for the poor. The second is of a no-frills bank account with a discounted rate of interest. So is this what financial inclusion is all about? Joining me to discuss this very important subject is Mr. Amitabh Verma, an IS officer, now a Principal Secretary in the Government of Bihar and a former Joint Secretary for Banking in the Union Finance Ministry. Thank you very much, Mr. Verma, for joining us today to discuss this subject. Let me begin by asking you a very basic and fundamental question. What is financial inclusion all about? And I'm asking you this question in the backdrop of the Government of India launching a new project called Swabhiman, which aims to provide banking access to 73,000 villages with a population of 2,000 people by March 2012.
Actually, what we mean by financial inclusion, as you've said, we imply that it should lead to everybody having a bank account. That's a saving bank facility. You must have a credit facility, remittance facility, and micro-insurance. That taken together should qualify for microfinance. And seeing that a well-regulated and a good institutional structure in the last about 60 years has not been able to deliver to more than 70% of the Indian population, the primary concern was that we need to have more informal structures and informal guidelines and informal systems to deliver to the people with a lot of decentralization.
What is the current status of financial inclusion? Because we get all these numbers and estimates.
As of now, I would say that still about over 65% of people do not really have access to banking facilities, that is even a saving account, and more than 85% would have no access to a credit facility.
Why is the industry not able to deliver it, especially given that over 40 years have passed for when we decided to nationalize our banks?
Banking structure itself cannot really deliver to the population we are trying to target under microfinance. You have to have other modes which can deliver. And if you try to thrust this responsibility on the banking system, I think that would be a failure, which we have seen. Had it been able to deliver, it would have delivered in the last 60 years. But somehow or the other, when we came out with our banking correspondent guidelines, the RBI issued them in January 2006, there are many categories which were provided for, like primary cooperative societies, non-profit companies, Section 25 companies. But somehow or the other, we've got a fix on Section 25 companies only. And again, I have a feeling that we are getting back into the same regulated and institutional mechanism to deliver this. So what I want to say is, the idea which we had at that point in time when I was in the banking division was that every branch manager should be in a position to appoint a banking correspondent for a particular village.
Right.
Like as of today, we have 6 lakh villages in the country. We have 50,000 rural branches. And if everybody appoints about 12 banking correspondent on an average, then you cover the whole country.
Absolutely.
All
you
the
get
villages.
universal coverage.
Yeah, you get all the villages covered. But some or the other, there have been a restriction on banks appointing individuals as banking correspondents. And that is where the problem actually lies.
Why is that, sir? Why is there such a restriction?
Because after all, he has to deal with public money, and there are some restrictions in the RBI Act which do not really allow people to collect public deposit without really being licensed by the RBI.
So why not get a post office worker, sir? In any case, their work has reduced after the advent of mobile phones.
No, the point now is that there are guidelines which restrict. Now, RBI has allowed Kirana shops now to become banking correspondents. I have seen a couple of bankers raising issue, what is a Kirana shop? Somebody who's selling 5 kilos of wheat or 5 kilos of rice, is he a Kirana shop? Somebody's opened a Kirana shop 5 days early, is he a Kirana shop? So what should be his turnover? So there are many difficulties there. Finally, what our concept at that point in time was that if you have individuals in the villages who are already delivering credit, it is not a formal credit structure. They know who to give, how to give, when to recover, how to recover, how much to recover when. So instead of trying to train and motivate and change the hearts of the officers of the banks or of the government officers who are again transferable, who are again getting promotions, and on getting promotion they move out. So this chain has to go on.
Is microfinance the instrument for ultimately achieving the objective of financial inclusion? And is the current model of the microfinance industry something that can deliver it?
First, on the interest point, what are you comparing with? You try to compare the rate of interest given by the microfinance institutions with the rate of interest which the banks are charging. And you're not comparing with the rates of interest at which loan is available to the people you are trying to cover. If you see that the loan currently is available at rates ranging between 60 to 120%. So against that, if a microfinance institution gives you at about 25 to 30%, it is quite doable. And our belief should be that with scalability, with increased volumes, with greater efficiency and more competition in the market, the rates will automatically come down. And we have seen the rates coming down and stabilizing around 25%. Here you also have to understand that there is a cost of borrowing. When the bank lends, the rate of interest is only its cost of lending. But what about the borrowing cost? A person travels to the branch and you have to travel at least 3 or 4 times to get a loan. So if you take a loan of about 5,000 rupees from a bank branch, you go 4 or 5 times to the bank, you get a loan sanctioned, it costs you about 500 rupees.
Right.
So that is 10% of the loan amount which you are borrowing. And in microfinance, we are looking at a small credit amount. So 10% in microfinance, you include the cost of borrowing and the cost of lending, and then you compute your rate of interest. So maybe the whole confusion which centers here is because we use a word called interest on small loan accounts. If we call it the cost of transaction, I feel that maybe people would, in a parliamentary democracy, be able to accept it even better. So rates of interest cannot come down below 22, 23% for such category of people. And as I said, global experience in Indonesia, in other places where you've had microfinance, it has shown that such rates are very easily sustainable.
What can an annual budgetary exercise of the central government do for furthering financial inclusion? I ask you because last year the finance minister announced a financial inclusion fund and a technology upgradation scheme also. What can a budget do when it comes to furthering financial inclusion?
No, we already have 3 funds, as you said, the Microfinance Development Equity Fund, the Financial Inclusion Fund and the Financial Inclusion Technology Fund. Some or the other, the utilization has not been what was expected. A lot of fund is still lying there. And most of the funds, the claimants of most of the funds are big public sector banks. I think for whom it was not really...
Which defeats the very purpose.
Yeah, it was not really visualized for them. So in the budgetary exercise, basically what we can see is whether we can give some incentive to the banks when they appoint the banking correspondents. But the type of banking correspondents I am talking of, not Section 25 companies.
Because initially, individuals who have localized knowledge.
Yeah, who have localized knowledge. In fact, the Rangarajan committee also has suggested individuals, but there are certain category of very restrictive individuals. Retired government officials, army men, retired teachers, they could only be done. The point is, why don't we
expand this?
Yeah, you expand it and you will have people. If that fellow is not performing well, in that village whom you appointed the banking correspondent, you have every right to change him the next year, appoint somebody else. And if somebody else is appointed, obviously the fellow who was doing his business earlier feels threatened that his competitor has come up and he will lose business.
That was Amitav Verma telling us about how India can achieve greater financial inclusion. It's time for a break now. When we come back, we'll continue our discussion with experts about the subject of financial inclusion. You're watching the Development Agenda for Budget 2011.